They say that April showers bring May flowers, but for the stock market, April also brings the so-called first quarter earnings season. May not sound quite as fun. Well, in this week's U.S. Bank Economic 360, U.S. Bank Vice President and Senior Portfolio Manager Mike Denneman joins Business Watch producer Kelly Leon in the studio to talk about what the earnings season has in store for us this year and what it means for the market. Mike and Kelly.
Thanks, Peg. Mike, you say earnings season is actually fun.
It is. That's a big celebration for us.
Yes, in your world.
Contrary to popular rumor.
In my world, I'm thinking about the May flowers. So refresh my memory. What exactly is the earnings season?
Sure. It's just a term that's used to describe the several-week period after each quarter end when publicly traded companies let us know how they did for that 3-month period. Because it's quarterly, we get it 4 times a year, earnings season in April, July, October, and January. Most companies are on a calendar quarter. And because there are so many publicly traded companies, it takes several weeks to get through all of these reports. On any given day, you'll have numerous companies giving us their results, typically kicked off by the aluminum company Alcoa for major companies, and then it just kind of snowballs from there for the next few weeks.
So this has to be significant for the market.
Oh, it definitely.
Yeah.
Definitely very important, something that's very closely watched. And the reason for that, if you get down to the base of it, is pretty simple. You have to remember, again, what a share of stock represents. That is an ownership interest in that company. And so like any owner, you're curious to know, how is your business doing? Were we profitable? Is our profit growing? How did we do last quarter? Was it better than the quarter before? Was it better than last year? And so that's why these numbers are so important to shareholders. And because of that, you can kind of see how that would play into the stock market as a whole. Good reports tend to drive stocks higher. Bad reports tend to push them lower. So all things being equal, you'd rather have a beat earnings season than not.
So we're in the midst of it. What can you tell us about it?
Well, unfortunately, this time around, we're kind of on the not side.
So good?
Yeah, not so good. Not terrible, but certainly nothing to get enthusiastic about either. And frankly, that's kind of what the expectation was heading in. You know, we know that the economy isn't growing particularly fast. As we talked a couple of weeks ago, consumers aren't spending a whole lot of money right now. So Wall Street's expectations heading into earnings season was that it was going to be on the mediocre side. The hope, of course, was that we might be surprised and get some really good results. But as it turns out, the reality is that, yeah, it's a pretty lackluster quarter. So again, that's not overly surprising, so we can't be too disappointed. But at the same time, we have seen an impact on the stock market. Stocks made their high for the year just a few weeks ago, just as earnings season was kicking off. Now that we've had about 80 to 85% of those reports have come in from major companies, again, on the disappointing side, it's not much of a surprise to see that the stock market has kind of trended down a little bit as well. So, so we'll cross our fingers and hope for next earnings season.
All right, and you'll keep watching it just for fun, right?
Just for fun. That's what we do.
All right. Thanks, Mike.